This chart basically gives us 3 pointers for prediction. First is the model value. Model value for after the halving, and thus also for the year 2024, is $532,000. And the other thing that we can learn from this chart is that every time there's a halving, when the model jumps in 2012, 16, 20, and 24 again, and when the color jumps from blue to red, that Bitcoin price is touching the model value. And the model value at the moment is between 50 and 60,000.
PlanB, a well-known figure in the Bitcoin community, recently made some predictions for 2024 Bitcoin price. He talked about the stock-to-flow model. This model predicts that after the next Bitcoin halving in 2024, we could see Bitcoin's value skyrocket to around $532,000. PlanB pointed out that historically, Bitcoin's price tends to align with this model's value around each halving. Right now, the model suggests a value between $50,000 and $60,000, so we might see Bitcoin's price rise towards this range as we approach the halving. Then, he discussed the Bitcoin market cycle model, which according to him is not really for predicting prices, but more for understanding where we are in the market cycle. According to this model, we're in an accumulation phase right now, which typically precedes a bull market. PlanB thinks this could lead to a significant price increase, maybe even a 10x jump. PlanB also looked at the Relative Strength Index, or RSI, which is a technical analysis tool. It shows market momentum and can indicate overbought or oversold conditions. The current RSI suggests we're moving from a bear market into a bull market, hinting at an upcoming period of growth. Let us now get into the video as PlanB makes some important points about the Bitcoin price action. As you watch, don't forget to hit that like button, subscribe, and drop your comments below.
We're now in the accumulation phase, which is exactly where Bitcoin should be, where we expect it to be. And the next phase is the bull market. So we're just waiting for the red dot. And it's very regular, the cycle. So you have accumulation, then a bull market, then distribution, then a bear market, and then people start buying again, accumulate again, bull market, start selling, distribution, bear market. And now, like I said, just waiting for the red dot. And what happens when the red dots come, they used to give a 100x in the first couple of bull markets, but lately that has slowed down a little bit to 10x, a little bit under 10x. I don't expect diminishing returns because we're at 2 or 3% adoption, and if we follow the logistic S-curve and Metcalfe's law, we can't have diminishing returns below 50% adoption. So we'll have exponential growth for a couple more years. I expect a nice 10x. That brings us somewhere in this area, which is consistent with the stock-to-flow model.
PlanB further analyzed the 200-week moving average. This chart shows a consistent upward trend for Bitcoin, with halving usually occurring at about 50% above this average. The current average is around $30,000, so the halving price could be between $45,000 and $60,000. After the halving, PlanB expects Bitcoin's price to enter the $100,000 to $1 million range. Another interesting chart was the realized price, based on on-chain data. It tracks the average cost price of all Bitcoins. Right now, Bitcoin's price has crossed all these cost prices, indicating the start of a bull market. PlanB thinks this could lead to Bitcoin reaching between $100,000 and $1 million. He also mentioned the Bitcoin in profit chart. It shows that nearly 90% of all Bitcoins are currently in profit. This pattern usually precedes a bull market, suggesting another cycle of growth is coming. Lastly, PlanB talked about a trading rule based on the stock-to-flow model. Buy 6 months before the halving and sell 18 months after. This strategy has already yielded a 22% return since its last entry point in November. So according to PlanB, the potential for Bitcoin's growth post-2024 halving is significant. But as always in the world of cryptocurrency, nothing is certain. The U.S. Securities and Exchange Commission, SEC, faces a January 10th deadline for approving an application from ARK 21 shares. It's widely seen as the final date by which the SEC may approve or reject the more than a dozen outstanding applications. Several signs point to an approval in the near future, like continued meetings between SEC staff, exchanges, and would-be issuers, as well as a flurry of filings. SEC staff met with representatives from the markets that want to list the products, the New York Stock Exchange, NASDAQ, and CBOE Global Markets, on Wednesday afternoon, an individual told CoinDesk. Fox Business first reported that the meetings were taking place, saying SEC attorneys from the Division of Trading and Markets met with representatives from the exchanges. Over the past few weeks, SEC staff have also met with issuers to address various aspects of their S1 filings, including having all issuers use a cash creation and redemption model instead of in-kind. Cash creation means what it sounds like. Authorized participants will purchase shares of the ETFs from the issuers using cash, rather than directly acquiring the underlying asset. Companies like BlackRock and Grayscale have argued before the SEC that the regulator should be comfortable with and allow in-kind creation. Georgetown University Associate Professor James Angel similarly argued in a letter to the regulator that only allowing cash creation would end up adding fees and other frictions to the various parties. An individual familiar with an issuer's efforts told CoinDesk last month that issuers had been meeting with the SEC to pitch the regulator on allowing both cash and in-kind creations. If you offer cash and in-kind, you have more market participants, tighter spreads on the ETF, closer tracking to the underlying assets, and greater investor protections, the individual said. However, the individual also noted that there may be a few reasons why the SEC may not want to allow in-kind creations at this moment, simply due to how existing rules are structured. Also on Wednesday, Fidelity filed a Form 8A, which allows exchanges to list shares. While this form doesn't in and of itself mean the product has been approved, it is a procedural step that must be taken if approval does arrive. An individual at another would-be issuer said their company would also have to file a Form 8A. James Seifert, an analyst with Bloomberg Intelligence, said the filing is a registration that's needed for the shares to begin trading. What will actually dictate SEC approvals is 19B4 and S1 approvals, he said, according to another SEC filing. There are two primary things that I'm watching and that others should be watching if they're interested, Seifert said. These ETFs need a 19B4 approval order, and they need a completed and effective prospectus, aka an S1. Without both of those things, the ETFs cannot begin trading. Bitwise previously filed a Form 8A. In the meantime, we have seen a number of amended filings addressing the cash creation model and naming authorized participants. And seemingly riding on the wave of excitement, the T-Rex Group, yes, really, filed for a number of inverse and long spot Bitcoin ETFs, presumably in anticipation of a spot trust product approval. None of these actions are smoking guns, but they all hint at a likely approval. Just 5 days to the most anticipated news in the industry. What do you think it's going to be? An approval or a rejection? Let us know your reasons in the comment section below. Also, don't forget to hit that like button, subscribe, and turn on notifications. Thanks for watching. Hey Savvy Finance enthusiasts, massive shout out for being the heartbeat of Savvy Finance. Your support has been the wind beneath our wings, and we can't express our gratitude enough. Now buckle up because we've got an exclusive deal just for you. Ever wanted a slice of the action? We're offering a golden opportunity to own part of our YouTube channel's potential future revenue. This isn't just an investment, it's an invitation to be a part of our story. Investing means you're not just an investor, you will be a participant in the future of Savvy Finance. No cheesy lines, just a genuine call to embark on this journey together. But wait, there's more. Your mission, should you choose to accept it, become a Savvy ambassador. Share our videos on every platform, Facebook, Twitter, LinkedIn. Your shares amplify our visibility, potentially translating to more views and more YouTube revenue. Here's the kicker. If our viewership increases, we would not be just growing financially. We would be making a tangible impact by spreading valuable financial education. Now the icing on the cake. Invest and you'll score exclusive access to our private Savvy Finance Discord. Here you can chat with Savvy Finance, swap ideas with fellow investors, and be at the forefront of exciting developments. Click on the link below to register your Gigastar account. You can also find the link to my offering page in the description below. Get your Gigastar account ready, review the offering details, and let's embark on this thrilling venture together. To the incredible Savvy community, thank you for being the backbone of our success. Your journey is my journey, and together, we're creating waves. Cheers.